I mean, you haven't had any time to delve through it, but on a net basis, slightly below estimates, but well ahead of last year. I mean, 2.5 times greater than last year.
Yeah, I mean, it's well within what we kind of expected. Yeah. So average breakdown. Yeah, difficult to look at without actually breaking down where it's coming from, what's happened to the coal and iron ore divisions. Yeah. But yeah, strong revenue growth from where we were last year.
Does it tell us, Mark, that BHP is coming from a position of strength when we talk about the potash bid?
We always knew BHP were in a position of strength compared to its peers. Yeah. We didn't have the same debt burdens that Rio Xstrata had. Obviously, the merger with Rio fell through on the back of their debt position. We knew we were in a strong position, very strong growth in cash flows, and we've got to do something with it.
What next? 130 is the current offer on the table. They don't like it. What price to maybe succeed in its interest in potash?
Well, the price of the potash itself has risen. It's, I think, 157 this morning. We were looking around about 150. You're looking there at an actual potash price of around $450 to $500 a tonne. Current price is around $370. So that's potash itself is way off its peaks of 2008 at $1,000 a tonne. But that sort of level of 150 is sort of approximately where you'd expect to buy new production, bring new production online, but you get the benefit of increased cash flows from the straight off. And that's what BHP are looking for.
Some are saying it's paying too much. Some are saying it's paying, $40 billion for a company. And when you look at the pie of potash compared to all its other divisions, it's still quite a small slice, isn't it? So why pay $40 billion for what will ultimately be still a minority department, a minority interest, mining interest, as in potash related to iron ore, related to coal, etc., etc.?
Well, like I said, BHP got strong cash flows. You've got 3 options. Share buyback helps EPS, but it doesn't help growth. You've got another sort of mega merger deal with synergies in an iron ore division with limited opportunities there, strong regulationally controls to get over. So this is seen as diversification into a new area, new geographic area, gives them potential to actually grow that once we get into it.
Could anyone else show an interest? We've all sorts of things. Chinese companies, Sinochem, maybe Vale, maybe even Rio Tinto. There's talk today that it could team up with a Chinese producer. Maybe CNOOC can launch an offer. How likely any of those options?
I think quite unlikely. I mean, Potash Corp have been talking up their own book, really. Vale did an acquisition last year, bought some potash themselves. We are not really in a strong position as BHP. Their investors wouldn't want them to take on the level of debt BHP after what happened in 2008. Chinese group, strong Canadian opposition, wouldn't want to take on 100% of the production, so we're looking at maybe a JV potentially with Rio, but again, unlikely. They're just looking at how it's going to unfold.
Billiton shares have fallen about 8% since the bid. Are they good shares? Do we hold them? Do we buy them right now?
If you're good on commodities, which obviously in my analyst I am, yes, BHP gives you a good diversification of assets and really strong growth potential if this acquisition goes through.
Mark, thanks a lot. Mark Heyhoe there from Westhouse Securities.